Again, before market opens, still very important to go over your trading plan and some of the rules. 2 to 3 days, wait for confirmation of trend change. Do not break the legs of the spread unless you see key support resistance. 4 positions, 2.5% maximum loss per position. Be long and short the market at the same time. Allow more time. Allow more space. Wait for volume and VIX confirmation. Beware of ABC patterns. Wait till end of day to make the trades and do not go short. Short, short calls or short puts. Beware of earnings date on your position. Do not chase the trade. Avoid revenge trading. Avoid trading based on emotions, and do not try to call the bottom. Look for signs of bottoming process and be flexible. Hello, Walid. So spiders, right, we talked about multiple support and resistance levels, and that market is oversold and due for a rally. And every bear market has a very strong rally. So we are kind of experiencing one of this, already almost 9% move in S&P from the bottom to the top. The question is obviously, how far can this rally go? Is it 8%? It's trying to look support resistance levels, right? From top from the March, right? March high, April high. The next level would be June or July high. So it could tap out somewhere on this trend. Like the last time the rebound, we failed to break through overhead resistance is 430 level. So assuming we're going to close at this level, it opens up the door to 430, right? And that's the 50-day moving average, 200-day moving average. This is the downtrend. A lot of overhead resistance. I think it's going to take a couple more good news for the market to break through this 430 level. If you zoom out and start from where the market reached its top, beginning of this year, to the strong rally in March, right? In March we had 12% rally. Then probably 12% rally will take us somewhere in here, right? So somewhere between these two lines, right? So again, I think we are in the pattern of lower highs. Right? I think that's the pattern. Nothing has fundamentally changed, except some positive news, which is great. So the next level, we went from 480 to 460. Let's call it equidistance 440, right? So I would say somewhere in here is where I would sell. You can start selling here. You can get more aggressive here. But I think that's reasonable to assume that this level will be hard for the bulls to break, right? And if we do break that level, then we have September high, December low, April high, and this downtrend, right? 450. And market does overshoot. Pendulum swings to the extremes on both ways. So I would, so in my journal, I'm writing, sell. I'm going to write this down. Call it 425 to 445. Right, so in my journal, I'm writing it down. I'm a seller from 425 to 445. Okay, and I'm a buyer. So I mean, support is here, right? So that's the previous breakout. So what was it about 404? So buy 404. So buy 404. If we drop below 404, then we're probably going to trade in the range. So short term, I think the support is this. This is the strong support, right? That's the neckline we broke. So I think next week maybe something like this. Right? It's reasonable to assume next week we have excuse me, pullback, retest of yesterday's high, as long as we don't break that, gap, higher low. So buy at 404, sell 425, 445. Watch beta. I would say portfolio beta should be, depends on your person, how risk taking, but somewhere around 1. If you love risk taking, okay, 1.5. If you don't like risk taking, half a beta. But this is the time to look at your beta, and if today your beta is 2, right? S&P, if QQQ went up by 3% and your portfolio is up by 6%, I think you're overly exposed, right? Because this could be a false breakout. So I would trim some of the positions, personally. So what I did today is kind of just that. So XLK, right, trimmed half of the XLK position, closed at 480, closed, half of the QQQ position at 304, closed Marvel puts. Yesterday, I closed QQQ, right, and trimmed spiders. So I'm watching the beta, and again, dollar cost average, and at this point we're at 414. Air is getting thin, right? If I want to sell at 425 and 430, well, I think course scenario another 16 points to the upside, but to the downside, 380 is confirmed, 30 points to the downside. So at this point, risk reward is getting, I would not be chasing the rally. I would be trimming the long positions. That's my opinion. Lalit Albert Asama, good afternoon. All right, let's review the position. Let's see if we want to make any adjustments. And again, this is a kind of across all asset class rally, right? Some are doing catch-up game. Materials are leading above 200, above 50-day moving average. Metals and miners above 200-day moving average, below 50-day moving average. Germany is strong rebound. Industrials are trading above, asset classes that are trading above February lows, I think, outperforming the market. If they're below, they're doing catch-up. Right, so energy breaking out to the upside, XLP, XLE making new all-time highs. 52-week highs, not sure if it's all-time high. John bonds, right? John bonds, very strong rebound. So I think, John bonds rally as much as spiders or VT, which usually never happens, right? So this is the bull argument. Bull argument that risk appetite is back on, right? This is the narrative. Soft landing is now the narrative. Maybe it's not a recession, maybe it's soft landing, right? So all of a sudden, junk bonds are spiking up. So that's the bull argument. REITs rebound, utilities rebound, almost at all-time high. Consumer staples above 200-day moving average. Biotech rebounded. Semiconductors above February lows, so semiconductors are strong. Russell 2000 right at the February low. Consumer discretionary, one of the weaker, more catch-up, so consumer discretionary is outperforming. Banks right at the February low. QQQ, more catch-up to do, right? So QQQ is heading higher to catch up with the rest of the market. Spiders are outperforming above February low. And what else? Costco announced earnings flat. Marvel announced earnings up 7%. And Nvidia continues to rally after yesterday's rebound. Okay. So that's constructive across asset class rally. Flattening of the yield curve, probably not the best price action. Treasury is flat, right? Probably market neutral. Flattening of the yield curve is probably slightly bearish, I would say. Weaker dollar, that's bullish, right? We have another 50% retracement. We've reached 50% retracement from the March rally to May high. So that's provides a lot of support for the bulls. VIX 25, right? That kind of this is where all the rallies stopped at VIX 25 since April. Let's see if we can market can push it forward, and probably next level will be VIX dropping back to 20, which is probably what's going to happen. Wheat staples continues to rebound, and ARK Innovation, strong rebound, 3 days in a row of higher highs, higher lows. The only worrisome is this decoupling of Bitcoin. Looks like Bitcoin is not participating in the rally. Right. So that would be a bear case. Why is Bitcoin not participating? But other than that, very nice price action. XLK, excellent. Very low. Okay. Let me look at trades. Okay, so FCX, I'm long FCX. Continues to rally. I have an order to close. Let's see. No changes. Next level, 40.15. We're getting close to that first exit. And then the second, Russell 2000, trim the Russell 2000. Next level is 750. QQQ. So I trimmed QQQ, the stock position, took some profits off. I did roll from 290 to 75 put. And the idea just to wait for, now the short puts are now profitable. Wait, maybe once it loses half of its value, close it, and then I have 275 put. And I think next leg down will probably break to 80 levels, so probably gonna stick with these puts. SH continues to drop. That's my hedge. I trim the position. We'll start buying as spiders gets close to 230. Silver not participating in the rally, kind of. Well, it did, and then it dropped. So kind of underperforming. Spiders, I trimmed the spiders position, right? We're at 414 level. And then we talked about XLK. I don't know if you have any questions. Let me know if you have any questions. Does it mean traders are selling bonds? No, it means traders are buying bonds or not doing anything. I mean, TLT is like 5-10-year bonds are flat, slightly higher. I mean, usually the relationship is inverse, right? When spiders goes up, I mean, there's two types of thought process, right? Money moving from, in the bull market, money is moving away from treasury market into the equity market. Right? So you sell TLT and you buy spiders. So far, they're moving in the same direction, right? They moved in the same direction, since the beginning of the year, right? Treasury bonds sold off, right? And the market was sold off. So people were selling both, the equity market and bond market, right? That was kind of why a lot of pension funds got, really beat up this year, because usually you do some kind of allocation to bonds and equity, and for the first month, both were selling off, right? So no hiding. Now, treasuries are going up and the equity market is going up. So one explanation could be, yield is lower, right? Yield is significantly lower. So that's good for technology and risk taking, right? Risk taking happens when there's low yield. Why is yield lower? When Fed is very hawkish and rising interest rates, maybe because it was overdone. One explanation, it was overdone, and now they're saying, well, maybe they're going to pause in September. Instead of 75 basis hikes in June and July, they'll do 50 and then pause in September. And PCE incrementally getting better, and maybe CPI will get incrementally better, and maybe Russia, Ukraine, a lot of maybes. So a lot of maybes, market oversold, so it's reacting to this. So there are a lot of assumptions in the market, but I don't think it's going to continue for too long. I can't imagine Treasury going higher and equity market going higher. My understanding, my opinion, Treasury market is going to continue going higher. People will hide in Treasury market, but spiders will, sooner than later will, revert back. I mean, we had 3 weeks, right? In March, it took week 1 strong rebound, week 2 less, 3 topped out, and then leg down. I assume we're going to have something similar. Maybe week 2, maybe 3, maybe 4, and then leg down, right? So I would say end of June, probably topped out somewhere end of June, maybe early July. why junk bonds considered to be a proxy for risk taking, right? The reason junk bonds are rallying because the narrative is, at least this week, is changing a little bit, right? People are under impression that maybe Fed can orchestrate soft landing. If they can orchestrate soft landing, they already might pause in September. Then it means that yields, people got too bearish on yields, right? Or too bullish. Yields went too far, right? The 10-year yield at similar level that it was in 2008, 2009, it's overdone, right? Overdone. So yields are pulling back, right? Treasury yields are safety asset classes are pulling back. That means people willing to take more risk. And the proxy for risk is these things like, the junk bonds. Traditionally, junk bonds is the proxy for risk taking, right? So that's why you see junk bonds. Hello, where is this? What happened to my chart? What is that? Keep changing the interface. Okay. So junk bonds are proxy for risk taking, right? ARK Innovation is proxy for risk taking. It's up, 6%. Usually Bitcoin is the proxy. So here you have divergence. Bitcoin is actually posting new lows. So I don't know, if I was a Bitcoin holder, I would be concerned, right? Next leg it's going to drop probably half of its value again. But anyway, so that's why. Yeah, when I think about junk bonds, I think about risk taking. When I think about Bitcoin or ARK Innovation or QQQ technology, high beta technology, I think about risk taking, risk on, risk off, right? Obviously, you're looking at the junk bonds, it's risk on, and this is not retail traders. So this is not you and I buying junk bonds. This is large institutions that are going after junk bonds. It's a pretty large market, so it's paying 5% dividend. So and good news that Apple staged very impressive rebound, so that's positive, up 4%. Microsoft up 2.5%, Amazon 3%, Google 4%, Facebook 2%, even Netflix is up 1.5%. So okay. Any other questions? William, welcome back. It's good to have you. John, welcome back. John, you're very quiet today. All right. Well, so and Again, history doesn't have to be repeat itself, but I mean, I would look at these rallies, right? Just kind of measuring, right? So here, the rally was about 11%, right? We had a steep pullback, 15%, 11% rally. So that's impressive. In the bear market. And then the last bear market was 2008. Right? We really don't have anything else to model from. But 2008, in June, right? It happened to be in June, right? From March low, it rallied 14%, an almost identical pullback. Timing a little bit divergence there, timing, but still, it was exactly 20% down. Right, this is more technical trading. Exactly 20% down, like it is now, and exactly 14% up. We're already 9% up, so it's reasonable to assume we're going to rally, probably around 10 to 14%, 10 to 14%. And then the bear market prior to that was 2000, right? 2000, we dropped 20% here. So it's 30%, but in 20% drop, 18% drop, then we had a rally about 11. And then we had a drop, 30% drop, like in QQQ. So QQQ can rally 20%, from its lows. QQQ, because it sold off more, it can rally 20%. Yeah, so it can get back to this line, right? It's up, what, 10%? Right, it's up 10%, so another 10% rally in QQQ. I mean, this is just measuring moves. It doesn't have to be this way, but based on, velocity and an acceleration, that can happen. And then the model will rerun over the weekend, not over the weekend, but on on June 2nd, right? June 2nd, and I'll have a better picture. As if stuff forecast toolboxes, because right now it's kind of negative, but flat. But on June 1st, it will rerun. And I assume we're going to be, the range is probably going to be somewhere between 385 and 440, if I have to guess. So I think model will say somewhere between 432 to 437 or 447. So this is where we're going to top out. Jumped, closing some option positions. Yeah, I think the most important is to look to beta, right? Assuming we're halfway through this rally, right? We're up 10%. Okay, we can go up another 10%. We can go up another 5%. I don't know how much we're going to go up, but I would look at the beta, right? Because the pullbacks are just as extreme as the rallies, right? We had a strong rally. Right, we had a strong rally in October, week 1, week 2, week 3. Probably starting next week, we need to start thinking about closing more aggressively, and then then week 3 and 4 keep closing the long trades. Even if you have any questions. Any other questions? Next week would be interesting. Yes, next week would be interesting. You know, I mean, we do have Fed. Consumer price index, June 10th. So we have a June 10th CPI data. That's next. And then we have to my bookmarks. Federal Reserve. And then we have FOMC meeting, today meeting June 10th, 14th and 15th. So CPI June 10th, June 14th, and you know, until June, I don't see anything else interesting that can. I mean, Friday, June 3rd, Bernard speak. That could always spike the market. And that's about it. So June 10th, until June 10th, June 15th, I think we continue to go higher slightly. All right, let's see. So we have 20 minutes into the closing. We are at session high. I mean, 408 is now your support, right? It's important next week to trade. These were the two overhead resistance. 410 is first. It's important for buyers to step in here. Worst case scenario here, right? Those are your two main supports. So short term, I would be a buyer into these pullbacks. So if it reaches 406, if it reaches 396, I would be a buyer with a very tight stop. If we don't hold this 396 level, then you know, failed rally, and we're going lower. So it's important to hold on to these two levels next week. This is less important because it's very brief, right? We only spend a day, but 396 we spend, you know, a week or so at this level, so it's a more important level. Bob, FCX is finally moving. I was a little bit uncertain about FCX was not moving, but now it's moving. So it's up 3%. Earnings about over, nothing. Yeah, some earnings will slow down, right? That's also probably good because they were not spectacular. That caused a lot of sell-off. Snap and Target. So that's not good, but let's see. Monday, nothing interesting Monday. We have HPQ, CRM. But you can see that earnings really don't matter, right? I don't think earnings matter, right? We've seen NVIDIA, right? NVIDIA had missed their earnings. They were down 10%. They were as low as I think as 140. Now they're at 187. So it really doesn't matter what they're earning. At this point, it's a perception of multiple. How much? What is the multiple? What is the right multiple for S&P and technology? And you have bulls and bears. Earnings at this point probably have very little effect on stocks, unless they're spectacular, right? Like Williams and Sanoa. I have no idea how did they have such a strong earning. But I mean, they're down more than 50%, so I guess that's probably a better explanation why they're up, right? They're down 55%. So CRM is Tuesday. That should. The CRM earnings, HPQ earnings. There's still some earnings. HPQ is doing really well. 52-week high. So Hewlett Packard, HPQ. Let's see what else interesting. NTAP, MongoDB. There are a few stocks that are still announcing earnings. Then we have Lululemon, Sienna, Hormel Foods. That's about it. All right, last 20 minutes are important for the market. Let's see how we're going to close. Let me know if you guys have any questions. Costco, one of the few retailers up on earnings. Yeah, I don't know about Costco. They're up, but again, they dropped 33%. So they're trading like technology stock, right? Because of their multiple. So again, I would be a seller because of the multiple into this rally. Disney, yeah, Disney is recovering, but also it's down 46%. That's crazy. So, I mean, these stocks are weaker than the other stocks, so I would not go long with them. Buy them long term. Also difficult because I think we're in the middle of this bear market. I don't think this is the end of the bear market. I think we're probably, I don't know, second inning, third inning, probably second inning if I have to guess. Any questions? 242. All right, last 15 minutes left. I don't know if you guys have any questions. Again, happy Memorial Day. Again, everybody, just want to say thank you to all the veterans who sacrificed for our country. Enjoyed the weekend. I'll stick around for another 10 minutes. If you guys have any questions, please let me know. Otherwise, I will see you on Monday. Thank you, Albert. I appreciate it. Thank you, Bob. Bill, thank you. William Bill, we have multiple Bills. Thank you. Thank you for your subscription, guys, and membership. It means a lot to me. Oh, if you do have time, please go to YouTube, search for TradeSpoon, and you guys are my best students, right? The best of class. So please subscribe to our channel. Click on subscribe. Click on the link. If you like the, if you like the content, if you like the content, then actually you can watch it live, and you can always share. Share it. Share it with your friends and family if you're part of any forums, traders forums, or on your social media, or if you have friends and you can just Snapchat them, or then it would be greatly appreciated. Be greatly appreciated. People, everybody needs help and guidance navigating current market conditions. So this content is free, and the more people I can help, the more people we can help, the better it is. Wilbert, thank you. Happy Memorial Day, Masama. Enjoy. All right, guys, it looks like 5-7 minutes left. We are at session high. I'm probably not going to have a reversal in the next 10 minutes. So it's a big win for the bulls. Enjoy the weekend. Have fun with your friends and family. Next week we have to watch this level, right? That's the breakout, the 408 level, 408, 404 level. I would look at this level. But as long as we are trading above 408, 408, I think bulls are in control, and path of least resistance is high. All right, thank you very much, and have a great day.